China likes to make things big and tall. Big monuments, big buildings, big party, big government, big military, big economy, and big companies. And they make them astoundingly fast. The only small thing the Chinese tend to overlook is the laying of a solid foundation. Hence, all the things that appear big in China are dangerously unstable. We all saw the demolition of the biggest Chinese company, Huawei, which is making quite a name for itself in pig farming now after its phone sales plummeted. Another example of a big yet unstable company is Evergrande, the biggest real estate company in China, the biggest real estate company in the world. Evergrande has started toppling now and is crushing China's markets as it crashes down. Hi and welcome. This is TFI Global, the foreign affairs and geopolitical analysis arm of the TFI Media Group, and I am your host, Sanbir Ranhotra. In this video, I will tell you about Evergrande's downward descent and its devastating effect on Chinese markets. Evergrande Group, China's second largest property developer, is about to collapse at any time due to its unsustainable debt burden, downgraded credit rating, and a very real possibility of default by the real estate group. Evergroup's imminent downfall is, however, hurting the entire Chinese economy, including its stock markets. The past week recorded the worst performance by Chinese stocks in the entire month. A small rebound did take place on Friday, yet Hong Kong's Hang Seng Index and mainland China's CSI 300 gauge ended the week down by 3% each. Chinese stock markets are already in a very poor shape, with President Xi Jinping's brainless crackdowns harming the investor sentiment in the communist country. In fact, HSI remains one of the world's worst performing indexes this year, this quarter, and even this week. Chinese stock investors were thinking that the stock markets will finally recover from the effect of Xi's regulatory crackdowns, but Evergrande's financial troubles seem to have dashed their hopes. Simply put, Evergrande is too big to fail for China. If it defaults, then it could be the final blow for China's highly strained economy. Evergrande's dipping fortunes could hit China's real estate market, ultimately affecting everything from the jobs market to property prices. Chinese stock markets seem to agree with the larger risks attached to Evergrande Group's default. They fear a contagion effect from Evergrande's debt default hitting the property and banking sectors. This contagion effect has escalated the risks associated with investments in equities. Evergrande's default has also triggered worries of similar financial troubles gripping over other big property developers and causing further mayhem in the Chinese economy. Evergrande Group has become the victim of a common Chinese problem: debt burden and tight liquidity. The real estate developer had also run into debt troubles last year, but it had averted the crisis with help from the government and wealthy friends. However, Chinese authorities imposed rules known as the Three Red Lines to determine whether companies can take additional borrowings. After the new rules were imposed, Evergrande again fell into trouble. In fact, the entire Chinese economy is deeply debt-ridden today. Last year, the King Gold scam surfaced, which showed how 4% of the communist nation's gold reserves were fake. A debt crisis is presently looming large on the Chinese economy as many of its leading private firms, state-owned enterprises, and regional banks are defaulting frequently. Why the downfall in the real estate sector hurts the entire Chinese economy, you might ask? From a Chinese perspective, the real estate sector becomes a critical driver of economic growth and prosperity. The communist nation has traditionally relied on the real estate market for its economic development, fueling wealth generation and improving investor sentiment. Even when the Chinese economy was confronted with sluggish growth or the stock market stumbled, Beijing relied on real estate development to stimulate growth. However, the Chinese real estate sector is now well past its saturation levels. The housing bubble of China is set to burst as 65 million apartments in the country are empty, which is also why a property giant like Evergrande Group has landed in a precarious situation. China kept milking its real estate and housing sector, even when simple maths established that there was no real demand for new homes. Superficial enhancement in housing prices did create an illusion of wealth generation, but it is quite clear that building new homes won't really stimulate new investments in China. Yet, the real estate sector remains critical to the overall health of the Chinese economy. At the end of the day, the consequences of the downfall of the country's second largest real estate developer are bound to create a chain effect. Creditors, investors, shareholders, and other interests associated with Evergrande, or even the Chinese housing sector in general, are bound to feel the pain of Evergrande's imminent downfall. There is no clarity as to whether she will intervene and bail out Evergrande Group. Meanwhile, as the real estate giant comes closer to a sudden downfall, panic seems to be setting in the Chinese stock markets and creating what can be best described as sheer carnage.